Well, we got a lot of stuff going on, and of course, we got to start with what happened in Iran. Looks like the U.S. has completed 3 bombing runs of suspected nuclear sites. Looks like all the airplanes are on their way home safe. Now we get to see what happens next. Early indications I'll be watching for will be the price of oil, what will happen in the Strait of Hormuz, where they shut it down for shipping. What will happen to long-term, rates? What will they go? Where will the fear trade? What will their response be? This is unfortunately not over, I don't think. So we're gonna have to buckle up and see where this goes. As for looking ahead, let's look at the economic data that we get next week. A lot of housing data right off on Monday morning. We are going to get existing home sales. Remember, existing home sales last month came in at a disappointing 4 million. Will they go below 4? I think so. I think we're going below 4 million. We're also going to get services and manufacturing PMI readings. Tuesday, we'll get Case-Shiller and consumer confidence. Wednesday, we'll get new home sales. Thursday will be weekly and obviously continuing claims. And we will get pending home sales, what is going on with future activity. And then finally on Friday, we will get the third and final inflation reading called PCE, and we will get consumer sentiment. I do want to congratulate everybody who joined school. We are now at officially 400. That means I owe you. When I get back to this mainland, I will be adding more value to school. I will be putting on the replays from the Vegas event. So you can look forward to that happening in the next week or so. Thank you for being there. And again, remember, when we get to 500, I will be loading the Get Your Money Right course in its entirety for you to consume for free as well. So again, more and more value coming. Let's congratulate Kyle, Palmyra, Lucas, Joe, Ryan, Kelly, and Alexander. Thank you for joining, all 400 members of you. Thank you, thank you, thank you. We got to talk about Fed President Waller. He came out yesterday and he was not happy. Fed President Waller is basically saying July could be the month for rate cuts. Obviously, he doesn't speak for Jerome Powell, doesn't speak for the board, but Waller, in my opinion, is making a play to be nominated as the next Fed chair. Again, he is trying to, in my opinion, get Trump's support, and he's doing that by saying, let's start cutting rates in July. Again, the Waller also says the Fed has a mandate on jobs and inflation. It does not have to provide cheap financing for runaway government spending. Good for him. Again, Congress, get your act together, whack spending. Fed President Barkin says we can't ignore a spike in inflation. We're going to have a lot of Fed presidents speaking this week, and we're going to start to see who's in what camp. Remember, we had 7 people say no cuts, and we had something like 9 say 2 or more cuts. So I think the Fed is going to start to be very clear who is on what side. Fed President Daly says additional labor weakening could easily turn into something bigger. Again, I think you're starting to see more and more people look at the cracks in the labor market and want to cut early and preemptively. Look for a fall cut, not July. This again, according to Daly, July, in her opinion, is too soon. What else do we got? We got Fed President Barkin, lots of Fed speak after their meeting last week. Business CEOs are wait and see mode on capital spending and hiring plans. Again, this goes back to the key word of 2025, uncertainty. The job market and consumptions are holding up. Nothing urgent in the data worth cutting rates today. And then not ready to dismiss inflation or risk from tariffs. So again, lots going on there. Fed President Waller says a 10% tariff on all imports will not have much of an overall impact on inflation. Fed President Waller also says, I do not want to wait for the job market to tank before cutting rates. Again, I think Fed President Waller is looking for to be nominated as the next Fed president. Danielle DiMartino Booth, if you don't follow Danielle, she's somebody I follow. She is going hard on Jerome Powell. She was a staunch reporter for a long time. She's been wanting to kill the Fed put for a long time, but she has had enough of Jerome Powell. He is saying that Jerome Powell is frankly being mean-spirited and purely political for not cutting interest rate. In my opinion, what Jerome Powell is simply doing is he's creating a pent-up demand, and we'll see what happens when that gets released into the system. I do have an interesting thought about what is crushing the middle class, and this is kind of counterintuitive. I actually think deflation is crushing the middle class. Let me explain. Deflation, the lower cost of things. You know, when you think back to 20 years, what did a computer cost? What did a TV cost? What did all these things cost? They were very expensive. Today, those are luxuries that can be had for a couple of $100s. So what I think is actually going on is deflation has made it easier for folks to spend and act rich. Also, it obviously has become a lot easier to spend with credit cards, now buy now, pay later, and so many other vehicles. While inflation is the way you get rich. You own assets, inflation's a feature, not a bug, you know the drill. But it's really interesting to think about how deflation might be the reason that the middle class is struggling. Again, it's not a fun topic to think about, but when you think about the cost of first class travel or, you know, the luxuries of life, they were one time very expensive, and today, not so much. So again, it's interesting to think about. What else do we have? I have a thought about who pays taxes. Somebody asked me this the other day, and what I looked up is the top 1% of income earners pay 46% of all tax receipts. The top 5% pay 66%. The top 10% pay 76% of all tax receipts. And the bottom 50% pay 2%. That was an interesting read. A couple other things. We got Darden Restaurants reported last week that they beat top line, beat bottom line, and are forecasting solid growth. And is that all? That's it. Again, folks, we're going to have to watch, see what happens with Iran. This is unfortunately not over. It's now taking a significant step forward. What will happen with oil? What will happen to the 10-year note? Will this lead to, heaven forbid, ground troops? We have to hope not. So lots of stuff going on. Hope you have an amazing day. Enjoy the view. It is pretty spectacular. Thanks, folks. Take care. Bye.